Alright, so we're gonna have a new segment where we just talk about what happens in the week, whether it's earnings or an economic standpoint. And there's no better time than now. We got all these top companies dropping earnings, whether it's good or bad. We got some companies hopping up 10%. We got some dropping like 20%. And then we got Russia over here acting like it's the Cold War Part 2. Over here trying to like fuck with our heads, saying they're gonna invade Ukraine. They're not. They are. Well, it's all fucking with the market. Let's see what happens. Alright, so it's a pretty crazy week, you know? From the economic side and the financial side. We're going to do this little thing every week where we just talk about the news and keep everybody in the mix of what's happening. It's a big part of investing, you know? You know? I always say, you know. But Monster and Constellation, are they going to merge? It's a big power play right there. Now, for y'all that don't know what Constellation brand is, that's like the owner of Corona, really. Now, Coke has a majority stake in Monster, so basically they own a Monster. It gives them like the indirect relationship in controversial industries like the energy drink market or like alcohol market or even actually the weed industry, because Constellation brand has like a majority stake in cannabis growth. So some say this could be a good thing for Coke because it gets into some controversial fields without actually getting into them, you know. But hey, you still are, you know, like. But not just that, Monster, 40 billion market cap. Corona, 40 billion market cap. And the king of energy drinks, king of beer, you know. I don't care, Corona, the toughest shit. But yeah, they merged together. That's a scary little brand we got there. And with the help of Coke too, they gonna be killing shit. So Virgin Galactic. Not everyone, but Richard Branson, that's his company. You know, you got SpaceX, Elon Musk, Blue Origin, Jeff Bezos. You know, they was having a little, what's it called, competition who gonna get out in space first. Virgin Galactic actually beat Jeff Bezos when he wanted to go out in space with his brother on his birthday. That was sweet, you know. But hey, this week they just reopened tickets to go out of space. 450,000, deposit 150,000. It's a good sign for them. But then one of their main brand leaders is leaving their board, so that's not a good sign really. But it don't really mean that much. They said there was no controversy between the dude or anything. It was just his time to go find another venture, and that's what this dude does. So he goes from one investment to another. So now we got the FBI forming crypto enforcement teams. That's better late than never. They should have been done that shit. Now a lot of y'all might have heard that in 2016, 4.5 billion Bitcoin was stolen from Bitfinex, or whatever the hell that shit is. And that was from just a couple, a nerdy little couple, man. They stole that much, and they finally got caught with that shit. Now, everyone knows people have been laundering money, doing all type hacking, stealing, all crypto type shit. That's why, honestly, people love that shit, because it's just some scheming currency. Now, as you can see, the rise of total crypto stolen, mainly from the DeFi protocol, it's just increased like crazy in 2021, so the FBI had to do something. The NASDAQ creates a death cross. Not the S&P 500, not the Dow, the NASDAQ. The Russell 2000 created a death cross beginning of this year, and that's like a small cap index, so it's kind of expected. Death cross is when a 50-day moving average crosses the 200-day moving average. And that shows it's a little correction. Could actually be a long-term bearish sign. Last time the NASDAQ did this was in April last year. Or no, 2020. But hey, it actually went up. Now, why is this happening? Well, for one, the NASDAQ, as you can see, went up a whole lot. And it was getting corrected. Now, Russia over here, with the psychological warfare over here, is it gonna invade Ukraine? Is it not? You know, they're saying probably after Olympics, and that's Sunday. So who knows? We'll see. Vladimir Putin, this dude is just a wild motherfucker. He gives no shits. He'll fuck up the whole stock market for no reason. Another thing that just proves all this shit is gold has been rising, and it's hit levels it hasn't seen since last June, something like that. And when people are investing in gold, that just shows that they're scared and they want a more safe investment. And that's what's happening right now. You don't want some volatile shit, and gold is not volatile. It's more volatile than people think, though, honestly. Now, also with March around the corner, and how the Fed said they were going to start tampering and raising interest rates, especially since inflation was actually higher than expected. Is the Fed going to raise interest rates higher than we expect? And not just that, there was a lot of earnings recently, and a lot of them were not good. We need to see growth when inflation is going up, really. So, we're going to start off with the good earnings, and Airbnb has some decent earnings. It beat expectations, basically, in everything. And not just that, it also raised its costs, which is it's a great sign, for one, especially since inflation. And not just that, it's not slowing down, so people are going to keep using Airbnb, and with higher prices. So, it's going to help out that company a lot. As you can see in this little picture, too, since 2008, it's been catching up to hotels, really, but hotels still got a big advantage there. Now, who else had some good? Doordash, they had some good earnings. The stock rose like 10%, but then the next day it just got hit, so it really didn't go up that much. It had a 34% rise in revenue. It went from 1.3 billion, and it was only expected to hit 1.28. It also had 369 million orders when only 361 was estimated. As you can see in this little chart too, DoorDash compared to Postmates and Uber Eats, really, it's killing shit. It's killing shit. And I honestly think Uber Eats would be killing shit, but DoorDash is actually killing shit. People thought it was just a COVID play, but I think consumer behavior actually changed, and people are just lazy. You know, it's America. Motherfuckers just can't get up and get their own food. They'd rather pay that big ass fee. Alright, let's get to Nvidia earnings. Everybody loves this tech company. It's had a huge increase since COVID, really, especially because like the metaverse play, and just, for one, it's now the 7th largest market cap in the world, and that's pretty impressive, man. Now, it beat estimations basically in almost everything, but the stock really didn't respond to that, and that could be because the stock went up a whole lot already, and now it's just not the time to be buying into a stock that's already like overvalued. You want to be in like undervalued stocks right now, because I don't think this correction is done, especially in tech stocks. Now, Roblox earnings. People thought this was just a COVID play, and hey, these earnings were kind of showing it. Now, it didn't beat expectations in basically anything. Like the main ones was bookings. It was 770 million when it was 786 was estimated. Revenue only 568 million when it's supposed to be 604, and loss per share was only 25 cents. Was only 11 cents was expected. This little graph shows the increase in like Roblox and kids joining it, really, and how long they're playing on the shits. But it doesn't show 2021 and 2022, and that's when it starts slowing down. Cause COVID play, everyone's out doing shit now. Another COVID play, but good company. These were COVID plays, but they're good companies that have a bright future, honestly. But hey, Shopify was not saying they're going to have a bright future this year. They said the pace of growth is going to slow down the whole year, really. The adjusted EPS was only 1.36 when the quarter before it was 1.58. The expected year-over-year revenue growth is lower than the first quarter of 2022's highest in the fourth quarter. This graph shows Shopify had a nice increase every year until 2021. And that could be because in 2020 it just peaked because of COVID, and of course everyone wanted to create their own shop, sell stuff online. Everyone's getting free money, can buy whatever they wanted online. It's a great time for e-commerce. And hey, I'm not saying Shopify is dead, but this is not their year. Another stock that's getting raped. It's a government stock too, huh? So it got the government on the side. That's decent. It had a net loss of 156.2 million, when the year before it was only losing 148 million. That's just not a good sign. But hey, for new companies, they're not really making money. They're losing money to have a better growth in the future. Like we're talking about that with Draftkings. That's another one that's losing money off the ass. Now the adjusted operating margins was 27%, and the year prior it was 31%. The adjusted EPS was 0.02 when 0.04 was expected. So it was just not making expectations. It's a new company, and yeah, we want companies that are reliable, that we know have been handling shit, got good history. Roku, they had a good history until recently too, though. As you can see, they outperformed Apple, Amazon Fire, and Google Chromecast since 2015, and by a decent amount too. But it don't matter. This also could be like COVID, dude. Well, for one, the shipping issues, they said, really hit them. Yeah, I'm dying. Draftkings. I'm a supporter for Draftkings, even though stock's been getting fucked up. It lost $326 million. It has fewer users than expected. And it lost $326 million, but it's expected to lose $1 billion this year, they said. And not just that, are they spending money wisely? You know, they are spending money to try and get consumers and shit, but is it really worth it? They spent $300 million on a 30-second ad during the Super Bowl. Well, no, $6.5 million on a 30-second ad in the Super Bowl. Altogether, they spent $300 million on sales and marketing. Everybody, like, this little chart shows, yeah, FanDuel and Draftkings is the most familiar and most used ones, and that is expected. I thought MGM would be a little higher with fucking Jamie Foxx over here advertising and shit, and every Hulu ad and shit. People still recommend Draftkings, but with them losing $1 billion, like they're saying they're gonna lose $1 billion this year, when that's not even half of what they lost so far, it's not showing a good sign for their stock. So long term, yeah, I would, but wait till it gets corrected to hop in this one, definitely.